Imagine a future where money, well, it doesn't just move faster across borders. Imagine it moving fundamentally differently,
Hmm.
using cutting edge tech to unlock, potentially trillions in value. What if you could get a shortcut to understanding this quiet revolution that's happening right now?
That's the key, isn't it? Understanding what's really going on.
Exactly. So today we're doing a deep dive into something really groundbreaking out of Singapore, Project Guardian. You asked us to go deep on, the real intent behind it, its objectives, the nitty-gritty of how it's being implemented, the tech involved, and crucially, its impact now and down the road.
Right.
And we'll also look at what others like India maybe are doing in this space. So our mission is to really unpack the details of how this project is reshaping global finance, giving you those informed insights.
Okay.
Okay, let's unpack this then. Project Guardian. It sounds like something from, I don't know, a sci-fi movie, but it's very real, driven by the Monetary Authority of Singapore, the MAS. From your perspective, what exactly is this initiative really setting out to do?
Well, what's really fascinating, I think, is that Project Guardian isn't just MAS acting alone. It's a highly collaborative effort
Hmm.
between MAS and the financial industry itself. It's specifically designed to test the waters, really, to see how feasible applications in asset tokenization and DeFi decentralized finance actually are.
Okay.
But, and this is important, while carefully managing the risks, risks to financial stability. So it's about pushing forward, but with guardrails.
Right, that balance, pushing boundaries but keeping things stable. That sounds critical. Why Singapore, though? Why are they leading this charge? What gives them the edge here?
That's a great question. Singapore has very deliberately, I'd say, positioned itself as a global hub for digital assets. They've gained a reputation for striking that healthy balance between encouraging innovation and making sure investors are protected.
Hmm.
The regulatory framework is quite well defined. You've got the Payment Services Act, the PSA, and the Securities and Futures Act, the SFA. These provide real certainty for businesses operating.
Security, yeah.
Exactly. And it ensures they comply with crucial rules like anti-money laundering, AML, and countering terrorism financing, CTF requirements. They were actually one of the first places to implement the FATF travel rule for crypto assets, tracing transactions.
Oh, okay.
So this whole environment, pro-business but with clear rules, makes it a very attractive place for digital asset innovation. It's a preferred hub.
That clarity, yeah, especially around regulation, that seems absolutely key. So, with that foundation in place, what are the core objectives? What's Project Guardian really trying to achieve?
Well, if you connect it to the bigger picture, Project Guardian isn't aiming for just small improvements. It's looking bigger. It aims to standardize processes, automate tasks where possible, and crucially, enable cross-chain interoperability.
Interoperability, meaning different blockchains talking to each other.
Precisely. Getting these different networks to communicate seamlessly. So the objectives are really about creating solid frameworks for tokenizing different kinds of assets. Yeah. Establishing institutional-grade protocols so cross-border transactions are safe and easy, and making sure everything complies with international regulations. MAS sees DeFi, its autonomous intermediary-free nature, as a really good testbed for tokenization. They believe it can seriously enhance efficiency, accessibility, affordability, and, importantly, liquidity in financial markets.
So, they're not just like dipping a toe in the water, they're aiming for quite a foundational shift in how finance works.
Exactly.
Which brings up a big question. What is the big deal about asset tokenization? Why is everyone talking about it? Why is it such a potential game changer?
Right. Asset tokenization, at its core, is pretty straightforward conceptually. It's converting the ownership rights of real-world assets, things you can touch or legally own, into digital tokens on a blockchain.
Okay, so like a digital representation.
Exactly. Instead of a paper deed or a share certificate, you have a secure digital token. This means assets like stocks, bonds, real estate, even things like intellectual property.
Hmm.
They can suddenly become much more easily tradable or transferable online.
Hmm.
Traditional assets are often bogged down by legal hurdles, jurisdictional limits, paperwork. Tokenization kind of unlocks them from those constraints.
Okay, here's where it gets really interesting, especially for you listening if you're trying to grasp the future of money and assets. What are the actual tangible benefits here? How does turning stuff into tokens improve things?
The advantages are, well, pretty significant. They could be transformational, really. First, liquidity. Assets that are traditionally illiquid, hard to sell quickly, like maybe a building or private company shares, can be broken down into smaller fractional
Some
units.
fractional ownership, right?
Yeah, exactly. Imagine buying just a small piece of a commercial property or a valuable piece of art. This makes buying and selling much simpler on digital platforms. It opens up assets that were previously stuck. Second, transparency. Blockchain provides an immutable record. Every transaction is recorded permanently and transparently.
So you can track ownership history.
Precisely. Investors can trace ownership and history with confidence, which should reduce fraud and build trust. Third, cost efficiency. This is a big one. It can dramatically cut transaction costs. How? By reducing the need for multiple intermediaries, brokers, custodians, clearinghouses, and slashing paperwork. Think faster, cheaper settlements.
Fewer middlemen, lower fees.
You got it.
Yeah.
And finally, accessibility. It potentially opens up markets to a much wider range of investors. Think institutions, but maybe eventually even retail investors getting access to asset classes that were previously out of reach, like private equity or high-value real estate.
Yeah.
It democratizes access.
Democratizing access. Okay. I've heard some, frankly, staggering numbers thrown around about the potential economic impact of tokenization. What could this mean for the financial world in the long run? We're talking big shifts.
Oh, absolutely. The projections are genuinely eye-opening. And it's because, like you said, this isn't just about making things slightly better. It could be a fundamental structural shift. Look at clearing and settlement. Widespread tokenization could lead to annual savings of around $20 billion globally just in those back office costs. That's huge operational efficiency.
$20 billion. Wow.
And then there's unlocking illiquid assets.
Yeah.
By 2030, some estimates suggest tokenization could unlock something like $16 trillion worth of assets that are currently hard to trade.
16 trillion.
16 trillion. Imagine all the real estate, private equity, art, intellectual property that's just sitting there, difficult to exchange. Tokenization could make it flow. The total market value of tokenized assets is projected to hit maybe $26 trillion by 2030. Some even think tokenized assets could represent 10% of global GDP by then.
10% of global GDP.
Yeah. And interestingly, NFTs, maybe not the JPEGs you first think of, but more institutional grade versions representing ownership could be a major driver of that.
Yeah.
It really changes how value is held, transferred, and accessed.
Okay, this is fascinating. Let's get into the practical side, the nuts and bolts. How is Project Guardian actually building this tokenized future? What are some of the key projects, and what's the tech making it happen?
Right. So Project Guardian uses a pretty robust technological framework. You can kind of visualize it as a 4-layer model, which they actually developed jointly with the IMF.
Okay, 4 layers, like a stack.
Exactly, like a stack or different floors in a building, each with a job. At the bottom, you have the platform layer. That's the foundation, the core infrastructure, the blockchain itself, designed to be flexible and programmable. Then there's the asset layer. This is where ownership is recorded. It handles both native digital assets, like cryptocurrencies perhaps, and these tokenized real-world assets we've been talking about.
Like the digital twin of a bond or something.
Precisely. Then above that is the services layer. This is where the smart contracts live, powering all the functions like payments, lending, borrowing, foreign exchange, all the financial activities. And finally, the top floor is the access layer. This is how users, people, institutions, applications actually interact with the network. Your interface, essentially.
Okay, that makes sense. Platform, assets, services, access.
And this whole framework is built on key principles. Transparency, using those immutable blockchain records we mentioned. Automation, through self-executing smart contracts. Privacy, which is crucial, using advanced cryptography like zero-knowledge proofs. These let you prove something is true without revealing the underlying sensitive data.
That's clever. Verification without exposure.
Exactly. And critically, interoperability, making sure different blockchain networks built on this model or interacting with it can actually communicate effectively. No new silos.
That interoperability piece seems huge. Okay, so that's the framework.
Yeah.
Can you give us some concrete examples? How are the big banks actually using this? I know Citi is involved pretty heavily, right?
Yes. Citi did some really interesting work under Project Guardian. They developed an application specifically for pricing and executing bilateral spot foreign exchange trades. So one-on-one FX trades, but using blockchain infrastructure.
Okay, FX on a blockchain.
Yeah. They initially tested it for US dollar versus Singapore dollar, but the underlying tech, the solution itself, could work for basically any currency pair. It provides real-time price streams, and importantly, it records the executed trades directly onto a blockchain, so you get that immutable, cryptographically secure record of the transaction.
Instantly verifiable.
Exactly. They also explored using oracles, which are like trusted data feeds that bring real-world information onto the blockchain for messaging within the trade lifecycle. The goal is to improve everything from pre-trade checks right through to settlement. And for that specific phase, they used a private permissioned version of the Avalanche blockchain.
Avalanche, okay. And I heard Deutsche Bank is involved too, with something called Project Dama too. Sounds intriguing.
It is. Project Gamma 2, led by Deutsche Bank, is focused more on the asset servicing side. Think digital asset management and how investment funds are distributed. It's a multi-chain pilot. The key tech partners there are Memento Blockchain and Interop Labs. Memento provides the ZK Sync stack for their specialized blockchain, the Memento ZK chain, which is a public but permissioned testnet.
ZK Sync that uses those zero-knowledge proofs for scalability and privacy, right?
That's right. High throughput, low cost, enhanced privacy. And Interop Labs brings in the Axelar network to handle the interoperability piece, connecting different blockchains together.
Okay, so you've got ZK Sync for the core chain's efficiency and privacy, and Axelar to bridge it to other networks. That sounds like a powerful combination. Can you break down some of those advanced features a bit more? What do they enable, practically speaking?
Sure. The Memento ZK chain testnet, built with ZK Sync, has some really cool features that hint at the future. One is soul-bound token-based digital identity. Think of it like a non-transferable digital passport on the blockchain.
Soul-bound, meaning stuck to you.
Exactly. Tied to a specific entity. It can be used for secure, reusable identity verification, streamlining things like KYC, AML checks, sanctions screening, proving investor suitability, all the compliance stuff, but potentially much faster and more automated. Another is paymaster functionality. This tackles the often clunky issue of gas fees, the transaction fees on blockchains. It allows these fees to be potentially paid through traditional payment methods, hiding the crypto complexity from the end user and providing a clear audit trail. Makes it much more user-friendly for institutions.
Ah, abstracting away the crypto part. That makes sense.
Right. They also have a custom-built block explorer. This is designed to manage confidentiality for sensitive on-chain transaction data while still allowing regulators the oversight they need. It's that balancing act again.
Privacy, but also compliance.
Precisely. The platform also supports tokenized fund creation and issuance using something called the Domani Protocol DApp. So you can create and distribute traditional funds, hybrid funds, or totally native digital funds on the chain. They use modular smart contracts for asset servicing, which helps automate and enforce the fiduciary duties involved in managing assets. And then there's the interoperability, powered by Axelar. Their testnet successfully connected to the test networks of Avalanche, Fuji, and Stellar.
Connecting to Avalanche and Stellar.
Yes, and the Axelar network itself aims to connect to, I think the number is over 69 different blockchains now, both EVM-compatible ones like Ethereum and Avalanche, and non-EVM ones like Stellar or Cosmos.
Wow, that's broad connectivity.
It really is. And it enables powerful use cases. Imagine a single fund manager distributing shares of their tokenized fund across multiple different blockchains simultaneously, or having digital assets and digital cash moved together across chains for instant final settlement.
So it really breaks down the walls between these different blockchain ecosystems. The vision isn't just one bank on one chain, but this interconnected web.
That's exactly the idea.
Who else is involved? Are other major players testing these waters too?
Oh, yeah, definitely. It's not just Citi and Deutsche Bank. DBS, a major Singaporean bank, has been very active. They've demonstrated atomic settlement, meaning trades either fully complete or fully fail, instantly using tokenized securities. They've even issued their own tokenized versions of things like treasury bills for internal FX transactions and tokenized bonds on their own DBS digital exchange.
So they're building their own infrastructure too.
They are. And SBI Digital Asset Holdings, part of the Japanese SBI Group, has also validated concepts around tokenized securities. They've gone quite far, actually operationalizing end-to-end processes for distributing these tokens across borders connecting Japan, Singapore, and Switzerland, for example.
Japan, Singapore, Switzerland. That's truly cross-border.
Indeed. And you have asset managers like Schroders. They've tokenized things like insurance-linked securities, ILS, which are complex instruments, and they're experimenting with DeFi models. They talk about creating composable finance framework.
Composable finance, like building financial products from interchangeable digital blocks.
Kind of like Lego bricks for finance, yeah. Building new products and services by combining existing tokenized assets and smart contracts.
So you can see Project Guardian's practical tests, its real-world viability, has definitely spurred on a lot of institutions and even other nations to seriously explore asset tokenization. It really feels like a harbinger of pretty drastic change in how we invest, potentially allowing things like fractional shares much more easily, democratizing access to those high-value assets we talked about.
Hmm.
And beyond investment, it holds huge promise for transforming cross-border trade to streamlining payments, reducing friction, cutting costs. That affects basically everyone involved in global commerce. It really sounds like Project Guardian is setting a benchmark, almost a global standard in some ways. But even with all this momentum, what are the challenges? What hurdles are still in the way? And stepping back, is this broader push for digital money and assets something other major economies, perhaps like India, are also focused on?
That's a really important point looking at the global landscape and the roadblocks. Challenges definitely remain. A big one is regulation. While Singapore has clarity, regulations differ significantly between countries. Harmonizing rules for cross-border tokenized assets is a huge task.
Patchwork regulation is tough.
Exactly. Then there's technology itself. Blockchain scalability. Can these networks handle massive transaction volumes efficiently? Platform interoperability. Can we ensure all these different systems truly work together smoothly without creating new digital islands?
Yeah, the interoperability challenge again.
And trust. Gaining the full confidence of traditional financial institutions, regulators, and end users is vital, especially when you're dealing with sensitive financial data and ensuring privacy.
Right, overcoming inertia and building confidence.
But despite these hurdles, the overall momentum towards sovereign-backed digital innovation seems pretty undeniable. If we look specifically at central bank digital currencies, CBDCs which are related, focusing on digitizing sovereign money itself, the global picture is quite striking.
How so?
Well, currently something like 137 countries and currency unions are exploring a CBDC. That represents about 98% of global GDP.
Wow, almost everyone.
Almost everyone is looking at it. And there are around 49 active CBDC pilot projects happening right now across the globe. And to your question about India, yes, India is very active here. India's e-rupee pilot is now the second largest CBDC pilot in the world.
Second largest.
Ahead of most others, yes. The amount of digital rupee in circulation reportedly jumped to over 10 billion rupees. That's around 122 million US dollars by March 2025. It was a huge increase, like 334% from the year before.
A massive jump.
Yeah, the Reserve Bank of India is actively expanding both the retail version for everyday use and the wholesale version for interbank transactions. With new features, offline capabilities, getting more banks involved, they're moving fast.
Okay, so India is definitely in the race. Who's the largest pilot then?
That's still China's digital yuan, the ECNY. It remains the biggest pilot by far. Their total transaction volume hit something like 7 trillion yuan, which is nearly $1 trillion US dollars by June 2024. That volume apparently quadruples from the previous year. So massive scale there too.
China's scale is always impressive. What about the U.S.? Where do they stand?
The U.S. is an interesting case. On the retail CBDC front, a digital dollar for the public, they're currently an outlier. President Trump actually issued an executive order in 2025 reportedly halting all work on a retail digital dollar.
Halting work. Okay.
However, and this is really important, the U.S. is still deeply involved in research on wholesale cross-border digital payments. They're a key player in Project Agora.
Project Agora, what's that?
Project Agora is a major international collaboration. It involves the U.S. Federal Reserve working with 6 other major central banks, the Eurosystem, ECB, Japan, South Korea, Mexico, Switzerland, and the UK, plus the Bank for International Settlements, BIS.
That's a serious lineup of central banks.
It is. And Project Agora's goal is to explore how to make cross-border payments better using a new kind of financial infrastructure. They call it a unified ledger. The idea is to have a common programmable platform that could integrate tokenized central bank money, tokenized commercial bank deposits, and potentially other tokenized assets all in one place.
A unified ledger, so bringing central bank money and commercial bank money together in tokenized form.
That's the concept they're exploring, to see if it can make cross-border payments faster, cheaper, and more transparent. So while the U.S. might be hesitant on a retail CBDC, they are very much engaged in innovating wholesale payments. And globally, these cross-border wholesale CBDC projects are really taking off. The number has more than doubled since 2022. There are now 13 such projects underway.
13 cross-border projects.
You know, like Project Enbridge, which is already connecting central banks and commercial banks in China, Hong Kong, Thailand, the UAE, and recently added Saudi Arabia. They're doing real cross-border transactions on that platform.
So, okay, even if the U.S. is taking a different approach to a retail digital dollar, The global push, especially for wholesale, cross-border digital money and tokenized assets, seems to be accelerating rapidly.
Absolutely.
And you've got Singapore with Project Guardian focusing on tokenization and DeFi, India pushing hard on its e-rupee, China scaling the eCNY, and major Western economies collaborating on wholesale solutions like Agora. It really paints a picture of a global financial system undergoing some profound changes.
It really does. And the future for Project Guardian itself looks pretty promising. 2025 is shaping up to be quite a pivotal year. We're expecting to see more projects move beyond just proof of concepts and into actual product launches and market adoption.
Real-world commercialization, then.
That seems to be the direction. SBI, for instance, has plans to commercialize tokenized asset-backed securities, possibly using Switzerland as a key market. DBS is looking to expand its offerings in tokenized private debt and equity. It's moving from experiment to business.
So these aren't just lab tests anymore. What's the ultimate vision here? Where could this all lead?
Well, the project is fundamentally laying the groundwork for potentially widespread asset tokenization. The promise is huge: greater financial inclusion, massive efficiency gains, much more adaptable investment strategies for everyone. If Singapore continues to succeed, it could absolutely serve as a model for other regions. And you can see it expanding into even more asset types, commodities, maybe more complex real estate structures, intellectual property rights.
Tokenizing almost anything of value.
Potentially, yes. The overarching goal seems to be nothing less than redefining how global finance operates, aiming for unprecedented levels of efficiency and inclusivity. And Project Guardian, alongside these other sovereign initiatives like India's e-rupee or Project Agora, really highlights this collective push, a push towards more harmonized regulations, better consumer education, and these composable frameworks we talked about.
Right, the Lego blocks.
Exactly. These seem critical if we're going to scale tokenized financial systems globally. And you see that coordination happening. The UK's Financial Conduct Authority, for instance, launched its own digital securities sandbox, and they're actively talking and coordinating with Singapore's MAS.
Global coordination is starting to happen.
It seems to be, yes, which is essential for something this transformative.
This whole deep dive, it really makes you wonder, if money, if assets, if entire financial systems become programmable, instantly transferable across borders, what does that actually mean for traditional ideas of national sovereignty, for economic control in the future? It feels like a really profound shift we're witnessing.
It certainly raises some fundamental questions.
What a journey, though. We've really unpacked Singapore's ambitious Project Guardian, haven't we? We looked at the innovative tech from Avalanche to ZK Sync and Axelar, understood its bold goals for transforming cross-border flows and asset management, and we've seen how it fits into this much bigger global picture alongside India's e-rupee, China's eCNY, and initiatives like Project Agora.
Mhm.
Ultimately, Project Guardian, it seems, isn't just about making things faster or a bit cheaper. It feels like it's about trying to rebuild the very rails, the fundamental infrastructure of global finance, making it potentially more transparent, more efficient, and maybe more accessible than ever before. So here's a final thought for you to ponder as we wrap up. As these digital bridges get built, connecting traditional finance with the world of blockchain and tokenization, what completely new forms of value, what new kinds of assets or services might emerge that we can't even really conceive of right now?
That's the million-dollar question, or maybe the trillion-dollar question.
Exactly. And how will this shift redefine not just how we trade and invest, but maybe even what we fundamentally value in the global economy? Perhaps that's a deep dive for another time, but definitely something to keep in mind as this quiet revelation continues to unfold.